All right, hi everyone. Welcome to day one of the Analyze Your Trade event number 209, the special live charting and analysis event. So just want to remind everyone, this is for educational purposes only, and trading is not suitable for all people. Please consult your financial advisor and only trade with money that you can afford to lose. So we got a great lineup today. We have 8 analysts set up for you today and 8 more tomorrow. So today we're going to be getting started with Markus Gabel of TradingResearch.com. I'm going to go ahead and turn it over to him.
Thank you very much, David, for inviting me. Greetings to USA and to the rest of the world. I can see Romania, Malaysia, LA, Thailand, especially to my second home in Thailand. I'm going to Thailand back in April for a couple of weeks to see my guys there and to bring logical trading to Thailand and, of course, the rest of the world. Yeah, I want to start with my quote of the day. As always, trading is more of a profession than a job, an occupation for people who enjoy intellectual work. I guess I'm not sure how long are you involved in trading or engaged in trading, but I guess in the meantime you figured out that trading is not that easy that people want to sell us in the branch or in this whole industry. Trading is a job and it's a profession. You have to feel this kind of passion to become a real good trader. But trading is also a craft. So you have to use your mind, maybe not your hands, just the hands with your mouse, maybe. But it's a good thing if you understand that trading is a kind of craft. And I want to show you today about my trading approach, my trading style, and how to trade with logic. Logic is my passion. Logic is my way how to trade, because it's important that you understand that trading is a game of mathematics and nothing to perceive. It's nothing that you can think about. Maybe today I do this, tomorrow I do this. Trading is a craft, trading is math, trading is pure logic. And once you understand that point, you have a great chance to become successful in or with trading. So before we come this, David mentioned already that's a general risk warning. You're responsible for your own trading. By the way, before we come to the charts, so I'm not the one who show you my house, my boat, my car or something like that. This webinar and this great event here from David and Timing Research is just for you guys and for the rest of the world, that you learn how to trade with logic and how to trade to become a successful trader. And the first thing you have to understand that for trading, you need a strategy. So trading means you are a real trader. What does it mean to be a real trader? First of all, you need to understand that there is no difference to any other kind of business. So for example, you're the owner of a flower shop or a burger shop or maybe pizza shop, something like that. Then it's always the same. You have a product, it's your pizza, your burger, your flowers, whatever you sell there. And customers come to your shop, you are the seller and you have buyers. So how you make money with this shop? Yeah, you bought your product, pizza, burger, flowers, more cheap, then you sell it to the customers. And the difference between the price you paid and you sell, it's your money. And in trading, there is no difference. And by the way, I can see the chat, guys. If you have any questions or if you have any wishes we should analyze, please type the chat box. Feel free. I can see it here, guys, wherever you are, Singapore, Istanbul, Canada, Thailand, wherever you are, please use the chat very busy, so we can have a kind of entertainment here and a great session together. I'm really happy to start here on Timing Research for this great event. So, and once you understand that you don't trade the Dow Jones, that you don't trade how should I say, any other product like a share or stock or maybe currency like that, then you understand that you have to trade the price. And euro dollar for the moment costs 109.61. Actually, in this second, 109.61. That's the price of the currency pair dollar, euro dollar. So how you can make money with that? Yeah, you cannot influence the price, which means you can do nothing. That euro dollar is going up or down. It's not in your hands, which means you need to understand that you need a strategy. And the strategy, the best strategy ever is, buy cheap and sell expensive. Yeah. And I want to show you in this. I got a question message here, British pound US dollar 4-hourly chart. Let's have a look on this. And yeah, just a sec. Here we go. So you see, for example, in British pound US dollar, we have an interesting situation. So you can see we have two different trends for the moment. So we have this uptrend, and this uptrend here is in trend on number 3. We had 100% correction, which means, let me point it out for you, that was the last high point, and that was the last low point, and you see the price went down 100%. From the last move, the price were correcting 100%. So now we are back to continue this trend, which means there was a great signal, or actually there's a great signal to go long, and based on a strategy, buy cheap and sell expensive, buy cheap and sell expensive on the way up. You need always clear rules for your entry and, of course, for your exit. So what's the sense of that? I will show you just again this. Let's see. This is the strategy. And guys, whatever you do in trading, you need a positive expectation value on your side. Look, it's always the same procedure. And there is very interesting. Look, you are on the right edge of the chart all the time, which means you have to make a decision exactly there. And you don't know what happens next. You will never know. You don't know if the price is going up or if the price is going down, because as my mentor used to say, we are dependent on the mercy of other market participants. We are too small. We are nothing in trading. You and me, we are private traders. We cannot influence the price in the right edge of the chart, which means we are always dependent on other market participants, which means you need someone who buy after you if you want to go long, or if you need someone who sell after you when you go short. If there is no one who wants to buy or sell after you, the price is not going into your direction. So you cannot make money. That's the pure logic. You can do literally nothing that your trade is going in that direction you want to have it. It's not possible. Otherwise, you are a central bank or Goldman Sachs or BlackRock, something like that. We are private traders. And that's the reason, if you want to play that game, you need a strategy. And the oldest strategy ever is trend following. Charles Dow, Edward Jones, Richard Donchian, Richard Dennis, the most famous and well-known trend followers ever, the turtle traders, most successful traders ever. And I can promise you, all successful traders around the world are trend followers. Why? Yeah, they follow the principle of every trader buy cheap and sell expensive. So, and this is the expectation value, around about 70%. If you catch a cheap price, and if you can sell it more expensive, we have an expectation value of around about 70%, which means the probability that you catch a cheap price and it's going up higher than the last high, vice versa, of course, on the short side, then it's on the lower side, has an expectation value of round about 70%. Guys, this is enough to make money. It's absolutely enough to make money, which means if you have 10 signals with exactly this situation, 7 times it's going into the profit and 3 times it's not going into the profit. Why is it so hard to make money in trading? Because in this law of probability is included the law of coincidence. Because when your signal shows up on the right edge of the chart, you can never know, never ever, if this signal will be one of the winners or one of the losers. You cannot know, and you cannot influence it. You can do everything that your trade is going into minus. Yeah, that's you can do with if you don't trade with any rules. But you will never know. Think about in a logical way. Think about. Stop trading with emotions and using your prefrontal cortex, using your logical thinking you use for your normal life too, is the only way to control your emotions. Yeah, you cannot turn off your emotions. You are a human being. You are not a robot. You are not an artificial intelligence. You are a human being, a lovely, extraordinary, wonderful human being. You cannot turn off your emotions. The only way you can use it to control your emotions. How you can control? With thinking, with logic. That's the reason why I used to say at the right edge of the chart to my students, you always need to know what to do, how, when, where, and why. 5 magical questions. 5. Let me repeat this. What to do, how, when, where, and why. So make a note on your paper with your pen right now. What to do, how, when, where, and why. Yeah? Very important. If you cannot answer one of those 5 magical questions, logical questions, you are forced to act in an emotional way. This is how your physical brain is working. People talk a lot of things about mindset. Let me tell you, this one mindset is bullshit. If you don't know how your physical brain is working, where the mindset is take place, how you will use it? It's not possible. So if you understand that your conscious thinking is taking place in your prefrontal cortex, which is beyond your forehead, there is conscious thinking. There are the answers of how, what to do, how, when, where, and why. But if you cannot answer those questions when you have to make a decision, then your limbic system, which is beyond the prefrontal cortex, takes over. And your limbic system is the place where your emotions take over. But trading is a game of mathematics. Okay? Trading is pure logic, pure mathematics. Price and volume, numbers, just only numbers, no more, no less, no news, no other things, just numbers. Yeah, therefore it's pure mathematics and logic. So the moment you make an emotional decision is the moment you will lose money. And you give the money to the people that use the intellectual logic. So, and therefore you need to know always, not sometimes, always what to do, how, when, where, and why. So maybe you might ask, but how can I find out this cheap price? How can I find out? Okay, understand. First part, I need a strategy. Okay, trend following is a lovely strategy. Buy cheap, sell expensive. So, but how can I control the emotions? By my rules. There are magic rules. That's the magic rules. With those 4 magic rules, you always can answer the 5 magic questions on the right edge of the chart. What to do, right edge of a chart. When you have to make a decision, going long or going short, with those four magic rules, you know always what to do, how, when, where, and why. So, rule number 1, a valid trend is needed. Rule number 2, your first entry between trend number 2 and 4. Buy cheap, sell expensive. Is the trend too old? Then maybe you feel safe, but then the trend is too old. The price is too old, guys. Yeah, and do you make money with a cheap price and sell expensive? Not different, not the opposite. The correction, rule number 3, has to run at least 38%. That's statistic, it's mathematic. Why? Buy cheap, sell expensive. And then you don't have to guess or to gamble when the correction is coming to an end. Yeah, we can use, for example, Heikinashi, or you can use, if you don't like Heikinashi, you can use any other candlestick patterns, Harami, whatever there is. But if you want to make it easy, yeah, then use Heikinashi, because it's simple. You only have two different candles. Trend candle, trend is strong. Balance candle, move is coming to an end. Over and out. And with this, you always have to know what to do, how, when, where, and why. So if we go back, where is it? So here we go. Now let's think about those magic questions, and please feel free to ask in the chat whatever you want. We can talk about everything, guys. So, and now you can see we have a trend. So question number 1, what is a valid trend? A valid trend is when you have a move, when you have a correction. Oh, that's the wrong color. This lit. If you have this one and a correction and a second move. And the second move must go higher than the first high. Then you have rule number 1, it's a valid trend. Yeah. So, and then first entry between trend on number 2 or 3 or maybe 4. Cheap price. The older the trend, the higher the price, the more expensive the trend. Yeah. And then you cannot make money. So then rule number 3, you remember we need a correction deeper than 38%. Yeah. And that correction here, for example, yeah, you see this correction, that was 38. Yeah. And the price stopped at around about 50%. Yeah. And then rule number 4. Rule number 4, we need a balance candle. So where is your balance candle? Here is your balance candle. You want to know what our balance candle looks like? It's always, look, the red ones are a balance candle. The red ones or the green one here is a balance candle. Balance candle in Heikinashi means you have a body in the middle and shadows as double as the body on the upper and the lower side. Yeah, that's balance candles. And balance candles always show up at the end of a move after 1, 2, 3, or a couple of trend candles when the trend was strong. Supply demand turns around. Then in this period, supply and demand is in balance. That's why we say it's a balance candle. So, and after a correction, you see a balance candle. Then we open the trade with a stop buy order and set a stop loss below the last low. And then we are waiting until we see a trend continuation. Trend continuation means the price is going from the correction to a higher high than the last high. And then you have a trend continuation. So, and then you have your own exit strategy. Yeah. You can just work, for example, with moving average line that you go out after with a trailing stop loss, or you use bar by bar, for example. It's up to you. You need exactly also exit strategy. Again, always to know what to do, how, when, where, and why. So when it comes now on the right edge of the chart, for example, this British pound US dollar, then you see, okay, we are still in the correction. We corrected 100%. That was the non-farm payrolls last Friday. But you see, interestingly, they bought the price back exactly at this level. And British pound US dollar, guys, is one of the most liquid pairs ever. And you see, to turn around, that's 4-hourly chart, to turn around the price exactly at this level, we can check it. Look, the low, 126.12, 126.12. That low, 126.08, 4 pips. Non-farm payrolls, low, 126.11, 1 pip. Guys, that was the last low was December 21. On Friday, January the 5th, with 1 or 3 weeks later, that turned around the price pinpoint exactly. You remember the last correction point, 126.12. In the non-farm payrolls, 126.11. 3 weeks later. Don't tell me this is by chance. That's stupid. It's on purpose, which means the huge money in trading makes the price. You cannot, which means we need a strategy. So, and now you see we have the next signal. We are here in trend arm number, no, come on. Okay. We are in a correction, and that in the last period here from 12 German time, by the way, until 4, we had another balance candle. After 3 candles down, the buyers came back, and therefore there is your signal to go long and speculating on a trend continuation. You remember, we have, show this again. Come on. Where is it? Here we go. 70% roundabout probability that we catch the cheap price and then we go up. Yeah? And that means actually there is your signal, there is the entry, and now stop loss below the last low, and then following, for example, bar by bar, as long as the move is going on. When the price is coming down, trail a stop loss and go out. Cut the loss. It's the most important advice I can give you. And every huge trader, Paul Tudor Jones, Ed Seykota, and I'm quite sure David will give you exactly the same advice. Cut the loss. Cut the loss under all circumstances when the price is not working for you. When the price is working for you, then let it run. And there is on purpose why the founder of this sentence, 1800 whatever, said the first part, cut the loss, and then let the winners run. That was on purpose, because if you cannot cut the loss, you don't have money to let the profits run. So therefore, we work with probabilities and not with guarantees. You don't know if we will see a trend continuation or not. It's just a probability of around about 65 or 70%, but not 100%, which means if there is not a trend continuation yet, then you have to cut the loss. But that does not mean that your strategy is wrong. That does not mean that your rules are wrong. You work with probabilities, they're not with guarantees. It just means that in this case, it's one of the 30%. It's not a problem. It's not a punishment for you. Don't take it personally. No one cares about that. No one knows you in trading. No one cares about you. Yeah. Of course, David and me, yeah, we care for you because we are trusting in your success. But outside of that, in trading, in the order book, no one cares for you. No one knows that you are a trader except your family. No one knows that. So why you should take it personally when the trade is not working? As long as you stick to the rules and as long as you follow the principle, you're always on the right side. But sometimes the price is not working, so go out. What is your entry criteria? That's the rules. Again, the rules. I need a valid trend. That's my criteria for entry. I need a valid trend. I need a young trend. I trade out of the correction and not when the price is running. Yeah. And before I go in, I'm waiting that the correction is coming to an end. That's why I use the Heikin-Ashi balance candle. Huh? Sorry. So that's the point. So let's see another signal. For example, that's here we go. That's S&P 500. So look, we have a downtrend. Yeah. And you see, that was a great signal. Can you see that? That was a great signal. Just to explain how to trade. Look, the price came down. And look, there was your balance candle. That was the end of the correction. And below the balance candle, there was the entry. And look, the price was going down. Yeah? So, and when the correction is, or when a move is coming to an end, we can trail a stop loss and we are out. And now we are looking for a new signal. Yeah? Sorry, what is WR%? Mrs. DL, can you help me out? What is WR%? Because I don't work with percents, by the way.
I think they might be referring to William percent R. Oh, win rate or percent. Okay.
The win rate. I don't work with win rates. Sorry, I cannot answer this question because in my sense, there is no logic beyond the win rate. The point is you don't make money with win rates. You make money with cut the loss and let the profits run, guys. I know this is something everybody will tell you about this risk-reward ratio, about the win rate, something like that. Guys, let me tell you this. I'm engaged in trading for 25 years. I do trading for a living for a long time. Risk-reward ratio, win rate is bullshit. It's just a trick. Because what should I tell you? I have an average of 22% every year, roundabout. Last year, I doubled my account, a small account, just to prove it's working. But how is it helpful for you? Guys, this copy-paste thing doesn't work in trading because you are your own person. Even I am profitable. And even I show you here in this wonderful event how to trade. Do you have a guarantee that you can do it exactly the same way like me? Do you think you can copy my experience of 25 years? Really? Think about it. It's not possible. You are your own person with your own background, with your account size, with whatever there is. You're your own person. So forget this bullshit of risk-reward ratio. Forget this stupid thing of win ratio, something like win rate. Forget it. The thing what you have to do is you need a strategy, you need rules, and the rest is cut the loss and let the profits run. Even we do exactly the same. Who will give you the guarantee that you have the same result like me? Because maybe you go out a little bit earlier than me, or maybe you go out a little bit later than me. So forget it. Understand trading is a game of mathematics and logic. You cannot influence the price. The only thing What you can do is stick to the rules. That's the only thing what you can do. Think about it. That's the reason. What time frame do you use? Personally, I trade in 4-hourly chart and daily chart. And in a couple of prop trading challenges, I trade in hourly chart. But basically, privately in daily chart, I have I have a couple of trades around about 80, around 100 products roundabout, and just trend following. This is what I am doing. So why is this so important, ladies and gentlemen? I need to explain this because when you don't understand this point, then you cannot become a successful trader. Making money, ladies and gentlemen, is, in technical terms, we call it I give it a shortcut, unlogical goal. An unlogical goal. Why is it? Why is this that making money with trading is an unlogical goal? It's kind of simple. When it comes to your signal, the right edge of the chart, you can do nothing that your trade is going into the direction you want. With a single trade, you don't have a guarantee. You are dependent of other market participants. You can do nothing for your profit, for your loss. Yeah, you're responsible, but you can do nothing that your trade is going into the profit. So therefore, you don't know if the next signal will be a profit or not, which means making money with trading is an unlogical goal you cannot reach directly. Hard to understand? Let me compare it. Sleep. Can you reach to fall asleep directly? No, you cannot. You can go to bed. And how often does it happen that you lay down in your bed and you're still awake? Yeah, you cannot fall asleep. Next morning, when you wake up, then you realize, that was my last thought. Maybe that was the last time I checked my clock. Maybe that time around I fell asleep. But you can do nothing to fall asleep now. Or losing weight, same. You can do nothing to say, tomorrow I have 30 kilos less. It's not possible. And it's like trading. You can do nothing to say, tomorrow I make money with trading. Therefore, we call it unlogical goal. So what you can do, to make it easier to understand, let me compare again with sleeping. What you can do to fall asleep. You can open the window, unless you're living in Thailand, then you need air condition. Yeah. But if you live here in Germany, it's cold, open the window, fresh air, change the sheets, reading a book, having sex, whatever there is. Yeah. But you can do something about the surrounding, or I call it the side effects. You can focus on the side effects, what you can do. Open window, reading a book, listening music, meditation, changing sheets, whatever there is, a good smell, a candle, whatever there is. And then maybe these things you can care about, they might help to fall asleep. Losing weight. You can change your food. You can make it happen that you don't eat too much after 6 p.m. You can go to the gym. You can have a walk every day. Yeah, whatever. That's the things you have in your hand. That's the things you can care about. Yeah. But you cannot losing weight tomorrow. Even you go today to the gym. Even you change today your food. You don't lose tomorrow your weight. So, and this is why we call it making money with trading is an unlogical goal, because you cannot reach it directly. I give you an example for a logical goal. For example, you are hungry or thirsty. Let's say you are hungry. So what do? You order pizza, you go to McDonald's, you go to the fridge, open the fridge, take out something and eat. And then you are no longer hungry. Or you are thirsty. Yeah, you order something, you go to the bar, you go to your fridge, take out some water, soda, limo, whatever, and you drink and you're no longer thirsty. That's a logical goal. You want to have fresh air. Open the window, go out, take a walk, then you have fresh air. So that's logical goals. It's logic. That's my goal. I can do this. I can reach my goal. Yeah. Guys, this is a logical goal. Making money with trading is an unlogical goal because you cannot reach it directly. The only thing what you can do in trading is having a strategy with a positive expectation value, having strict rules that you always know what to do, how, when, where, and why. And then, finally, stick to the rules. That's the point. Yeah, maybe you can, I ask you something. I have a question right now. How often does it happen that before you come to the trades, you talk to yourself, today I stick to my rules. Today I don't do stupid things in front of the chart. And when it comes to trading, then you do stupid things. How many of you made this experience in trading? You know what to do, but you don't do it. We call it the gap between knowing and doing. You know the reason why 90% of all traders lose money? They are not stupid. Not all of them have no rules or strategy. Many traders guilty in charge, yeah. So 90% of all traders, I guess a lot of them maybe have a strategy. Maybe they have rules. But you know what? The problem is there is a gap between knowing versus doing. We call it the gap. How you can close this gap? Only with a mentor. Guys, after 25 years, I can tell you this point. You cannot teach yourself in trading. Why is it? Because about logic. If you don't have a mentor, if you don't have a teacher who teach you every day, who is in your back as your support, as your greatest critic, as your best friend, if you don't have such a guy, how will you teach yourself? There's a big word, and it's feedback. So for example, I told you today my strategy, trend following. I told you the 4 magic rules. Do you know how to draw the trend perfectly? No, you don't. So you know what is the only feedback you get with your trading? Easy. It's your account. It's your account. And the problem is, if you make money and the price of the account is increasing, you think you make everything right. And if your account is going down, logic, then your mind is telling you, you make something wrong. There's something wrong. And you know what is the worst case? You have the same rules. And then you're going up and going down with your account. And you make emotional decisions. So, which means the only feedback without the teacher, without the mentor, is your account. And the account just tells you if you make money or not. But the account will never give you the answer if you were right or not. We call it an internal feedback and an external feedback. The external feedback is your account. And if you don't have a teacher, believe me, YouTube videos are not teachable. It's not your teacher. TikTok, Facebook is not your teacher. Teacher is like David, like Anchor, like me, people with many, many years of experience. And believe me, I'm quite sure, I haven't asked yet, but I'm quite sure David has a teacher also, a mentor. I have 4 mentors. Up to date, I have 4 mentors. Yeah, without my mentors, I would not be here. I could not make money with trading. External feedback is just your account. And it's just going up and down, and you think you make it right or not. But maybe you have your rules and the price or your account is going up and you think you are right, you do everything right. And then and suddenly you have a couple of losers and the account is going down, but you didn't change your rules. Craziness, absolutely horrible, horror story in your brain. My God, what's going on here? If you have a mentor, if you have a teacher who can teach you, come down. Look, there was your mistake. Look, that's technical minus traits, a necessary part of the game of probability. That's the reason why you cannot teach yourself in trading unless you have infinity lifetime and money. Yeah, if you have that, then try. If not, if you don't have so much money to figure out by trial and error, then you should think about an education. And you will have a lot of guys today that can teach you. Yeah, maybe someone you find sympathetically, then you should really invest in your education before you try about price, about webinars and videos, something like that to figure out what you can do. Guys, we are living in the 21st century. Everything is available. About trading, everything is said already. Everything was written down. Everything was showed already. Millions of videos. But why we still have 90% of losers? Why? Everything is there. Everything, literally everything is there. Look, today, and this is not the first event David make here. That's not the first event. I guess you have 3, 4, 5 times a year. Everything free of charge just for you. Why we do have still 90%? If it were that easy. So it's about the gap between knowing and doing. Look, I want to show you a couple of trades. Actually, I have it on a prop trading account. So I show you, for example, this one, what I did here. This is US dollar, Canadian dollar, for example, 1 hourly chart. So, and you see, I stick to my rules, of course. Yeah. So that was the impact of the non-farm payrolls. So, and there was the change of color here. I have an open trade. My stop loss calculated my worst scenario here. And then I see, okay, price was going up, almost trend continuation, but not yet. Price get rejected here. I trailed my stop loss in profit. Who cares? I cannot lose money anymore. Yeah, so who cares? And if you ask me what I do now, I can tell you nothing, because I know what I have to do. What I have to do, when, where, why, how, when, where, and what to do, what to do, how, when, where, and why. Yeah, what to do? Trail the stop loss in profit. When? Now. Where? Here to the profit zone. Yeah. Why? Because I can see the price get rejected the last point, high point. So I don't want to lose money. So I'm close to continue the trade or the trend, but I don't want to lose money. So trail the stop loss over and out. And now let the market decide. We will have a next chance because we are on trend on number 4. Remember rule number 2, first entry between number 2 and 4, which means we can make a re-entry. Yeah. So I am one of the guys, I love to show you my losses because profit trades, everybody can show you profit trades, but that's stupid because it's always confusing, Everybody shows you the profitable trades. But when you are sitting in front of your charts, you have losses. And you ask yourself, in God's sake, how is this possible? Everybody makes money, but not me. Everybody makes money with trading but me. What's going on here? I show you my losses. So I had a loss a couple of minutes before, 2 in a row. Yeah, look, I stuck to my rules, of course. I stuck to my rules, you see. It was trend on number 3. We had a deep correction. There was my balance candle. I opened the trade there. Yeah, but the price was not going up. It was going up a little bit, but without the trend continuation here. It was not happening. So, and then I stopped out here. So, did I make a mistake? Sure, I did. What could I make it better? Yeah, when I can see close to the non-farm payrolls, for example, trail the stop loss into the profit, then I would not have a loss. But it was not a problem because I calculated my worst case scenario here. And as always, it's my penguin factor. Yeah, it's always my comfortable zone about my money management. So I'm far away to act in an emotional way. And then you see, I did my second entry. You know what? Re-entries you only can make and can do when you control your emotions. And that's one of the reasons why I teach my students never work with this stupid percent. If you ask someone, how much is your risk? How much should I risk by trade? What's your answer? Most of the time you get this stupid thing, 1% or maybe 2%. Yeah? Am I right? It's always the same. If you ask someone online or if you ask some hosts, always tell you the same thing, 1% or 2%. Guys, think in a logical way. I teach my students neuroscience because it was my education also with one of my mentors, neuroscience. As long as you don't know how your physical brain is working, you cannot become a successful trader. And then you realize your brain, your prefrontal cortex, is not working with numbers. Your brain is working with pictures. Pictures are the cause for your actions, logical actions or emotional actions. So, what kind of picture do you have in your mind if I show you 1%? There is no picture. There's just a big question mark. Because you ask next, your brain is asking you as next, 1% about what? Yeah, about your equity, about your account. What is it? 1%. So maybe you have a small account. Maybe you have a small account, $500, maybe a small account. If I think about my guys in Thailand, for example, they don't have that much money. That's when I bring logical trading to Thailand to help the people over there. So they just have small accounts, $500, for example. What's about 1%? 1% is $5. And with $5, you have a picture in your mind. And this picture causes your actions and your feelings. And then you say, $5? What the heck? Should I do it $5? Yeah. And when I see, if I have a risk of $5 and the price is going for me, then I make money $3. How should I live with $3? So what's coming next? You think this 1% is stupid. I take 50 and you're 10%. But not 10% or 1% causes your emotions. It's the number. It's the picture of 50 or $5 because you have the bug in your brain. You have this picture in your brain. This causes your emotions. You think, you see, we have so many things to talk about trading. Yeah. Okay, let's go back to the chart. So I make my second entry here. Second entry. Yeah. And I work with this. That's the magical Dow How line. And then I see the price was not going up. I trailed from my stop loss was here. And I trailed my stop loss immediately here. And you see, I have a teeny tiny loss. Just a small loss. Who cares? And now you see the price going down. Who cares? Yeah, I'm out. I have just a small loss. Cut the loss. It's the most important part in trading. Yeah. So let's see. That's what the other one. And here was another one. Look, same procedure. We have a downtrend and we have two trends. So you see on the one hand, we have this uptrend, trend on number 5. Yeah. I was not engaged in trend on number 3 or 4, which means I cannot go long. Why not? It's trend on number 5. You remember the rule? You remember rule number 2? First entry between trend on number 2 and 4. If you made money in trend on number 2 until 4, then you can make re-entries in every further trend on, but not your first entry. Yeah. So therefore, I cannot go long here. Who cares? Not me. I don't care. For me, it's more important to stick to my rules because every mistake, or I call it to my students the misdeeds, every misdeed costs you money. You have to realize you work with probabilities, which means you must have minus trades. Not every trade can be a winner. You must have minus trades. You just have a probability. Minus trades. Necessary. Cut the loss, but you will have losses. But if you have to add misdeeds, technical mistakes by breaking the rules, and if you have to add it to the minus trades, it's absolutely impossible to make money with trading. If you have technical mistakes by breaking the rules for entry and exit, plus minus trades, it is absolutely impossible to become successful with trading. So you see, I have 2 losses here in a row. Why? Simple. There was a downtrend. The downtrend was actually is the correction of the uptrend right now. So, and that means there was my turnaround. We were in a correction. You see, correction went up 76% at that moment. I went short. Yeah, and then the non-farm payrolls, but I trailed my stop loss and was out. Re-entry, balance candles, re-entry, and I can see the price is not going down. I trailed my stop loss and I have no loss. Just trail the stop loss and you see price is going up. Yeah, I don't care. Does it mean I was wrong? Of course not. Does it mean my strategy is not working? No, it's not. It's just probabilities. You don't have a guarantee. The only way to make money is to sticking to the rules. Think about it. Trading is an unlogical goal. And guys, Therefore, you might realize why I showed you this one. Trading is more a profession than a job, an occupation for people who enjoy intellectual work. So this is my last advice I can give you. Find a strategy which fits to you. It must not be trend following. You will have 7 other speakers, and tomorrow, I guess tomorrow also, you have a lot of speakers. Find a strategy which fits to you as an individual person, and then look for a teacher who can teach you this strategy. And then invest not in trial and error, invest in that teacher. And then you have a chance between 1 and 3 years, not months, not days, not weeks, normal job, normal education, 1 to 3 years to become a stable and successful trader. Thank you very much for listening. Thanks that I could be a part to join this great event with Timing Research and with David. Thank you very much for your attention. I wish you all the best, and maybe we see each other in my course or in my Know How family. Oh, by the way, if you just let me show you this finally, almost forgotten. I'm more focused on teaching you than on selling something. If you want to have more information, David put it already in the chat box. My homepage, knowhow-trading.com, in English, by the way, and you will have a lot of information about the course, something like that. So maybe you'll find something was interesting for you. And let me say, thank you very much. Have a good day. And as always, have courage and be kind. And may the force of the logic be with you. See you next time. Back to David.